Thanks for joining us here on Real Estate Jerky. I'm your host, Ed Parcaut, president of Lending for a Living, along with Marlene Chaplin, my trusty sidekick and co-host. I'm looking forward to helping you navigate our ever-changing real estate market and community, as well as keeping you up to date on everything you need to know to protect your home investment in this new year of 2022. I can't believe I'm saying 2022. I just thought it was like 2021 the other day. Our studio is still virtual, and wherever we have a solid Wi-Fi connection, and our fabulous engineer, Mike Murray, and the incredible radio signal of iHeartMedia and this station, KFIV. We always bring you something to chew on here at Real Estate Jerky. Remember, if you have questions, you can text or call me at 209-404-1915 or email me at radio@realestatejerky, and you can get Marlene at that same one too. Hello, Marlene. How you doing?
Hello, Ed. It's still a happy new year, and I'm still excited that it is 2022, I think. You don't have any bad news for us, do you, Ed?
It depends on what you consider bad news, right? I mean, inflation's at a 40-year high. I mean, is that bad news or is that good news? Well, I mean,
you're buying groceries, a lot of groceries. Got a big family.
Well, you could always, if we had Dan Aykroyd around, he can make fun of Biden like he did Carter, and he could say, you want to smoke a $75 cigar and drive a $600,000 car? You have to see the skits. They're freaking amazing. I mean, I guess I can only say
Aykroyd was the best. I mean, I like Dan Aykroyd as much or better than Chevy Chase and Bill Murray back then. Yeah.
I think that period those people were on was the best Saturday Night Live up until the part of the 90s where they had Chris Farley and all the other people on.
Yes.
And ever since then, I have not
in a van down by the river.
That's right. And the falls on the coffee table. I always like the Bears. Oh, I got a heart attack. That is a radio show.
How are we doing Saturday Night Live on Real Estate Jerky?
Hey, we do everything. We do everything. All right. So the other bad news, you're asking if we had other bad news, rates have started to rise, and that's, a little, and like we said, they're going to go up. That's just what has to happen. Government, they keep buying the mortgage-backed securities and all the debt of our government to keep the rates down. And at a certain point, they can't do that any longer. And we're kind of there. We're going to see them go up. But I'm being told that we're going to start seeing them settle more in the middle of the year into the end of the year. So, don't overreact because rates are going up. They're still historically low rates. I mean, yes, we got so spoiled with 2%, 2.75, 2.625, 3.5 is not a bad rate. That's still an amazing rate. Because when I got into this business, I was taking people from 13 to 9 and they loved me. And now they're like, what? I got to take a 3.5?
Yeah. Well, I mean,
I'm not saying
I
that's
heard
what
an economist say, and we can talk to Mr. Bryant a little bit, but I heard an economist say back when I was back in the day, Ed, when the interest rates were prime was, 16. I mean, we had ridiculous.
You mean 1980? Was there you talking about in the 80s?
I am talking about the 80s. And I heard an economist back then say that our economy, and it was kind of a profound thing. It stayed with me all these years as I've watched now, and you've been telling me that the interest rate's going back up. He said at the time that a healthy rate of interest across the board economically was between 5.5% to 9%. The banks can make money. He listed all of these things, and I'm not the money girl, I'm the advertising girl, right? And marketing and trend girl. But I remember at the time his analogy and description, and as I've lived it out, he's probably right. It seems to be a rate that's doable. It doesn't drive our cost of living through the roof. It doesn't. The banks don't go crazy, and This last 10 years has been artificially left to it.
But you got to remember, 2 years ago, pre-pandemic, we were here and everybody was happy. everybody was loving the rates, and they were like, oh my God, the rates are so low. I can't believe it. Let's go buy everything. And then the pandemic came. And then, the first 6 months, everybody was like, how am I going to get along? I have no job. I have this. I don't have this. And then all of a sudden they're like, I got to move out of the city and move into the country. Like Beverly Hillbillies. We should put that song in here.
Yeah, come and listen to a story about a man named Jed, an old time.
Anyway, moving out. Yeah. So basically they're moving out of the opposite way, not from Beverly Hills, but out of Beverly Hills. Yeah. And now everybody's kind of going to settle where they are. I mean, because it's too late to move to Texas and get a great deal, or Arizona, or Idaho,
Tennessee, Kentucky, all of them. I mean, they're all.
I think I hear. Yeah, well, definitely not Georgia now, since they won this week. That's all. Everybody's so happy with that. Alabama is probably going to start selling some of their houses. You mean we lost one time in the last 20 years?
Go Tide. You're listening to Real Estate Jerky here on Power Talk 1360 KFIV with our host, Ed Parcaut, MBA veteran, mortgage advisor, and president of Lending for Living. You can reach out to Ed at 209-404-1915. That's 209-404-1915, or at lendingforliving.com. Georgia, Arkansas. What about Arkansas? What are we going to do with them?
I don't know.
Don't say that. Don't say that.
Squeal like a pig.
There's somebody listening that wants to just.
Hey, wherever you want to move to, it's all I say is, and I did lives, a ton of this stuff is move there the worst time of the year. Go through that. If you can still handle that, then move there. Don't just move there, but you have to, because some of these places in the summer, you can't get off your porch. You have to have a screened in porch because those bugs, mosquitoes, and other things will eat you alive.
Carry you away.
But again, this whole show that we do this is about understanding real estate, understanding the market, understanding community, understanding how, if you're not part of the election, how that can affect you. Right. I mean, that's huge.
Yeah.
You need to know all this stuff. And I know I've been saying that rates are moved up and people are freaking out. But one thing that's really changed, and we talked about this last week, I think, or the week before, I don't remember, it's been a blur, about how a lot of people have been calling me for reverse mortgages. And then we have this program where we can get the max out, not just the FH, because there's FHA that most people use, and then you can get this certain amount, right? Say that you can max out that total out of your house, 400,000, but you can only get 60% of that the first year. And that includes paying off your loan. This other program, whatever you can get out that year. So it's been helping a lot of people who, but the difference is here's who it doesn't help. You got husband and wife, and the wife is under 62, right? You can't have that. Where FHA, you can. This other program, you cannot. Everybody in the household has to be above 62. So I have one gentleman that we're going to pull probably $1.2 million out to go, because he needs it for something. And he bought it for 1.2 million years ago, and he needs that money back out to do something else, where with a regular reverse mortgage, we couldn't do that. But with this other program, same thing set up. You don't make payments. You can, if you want to, you don't have to. So,
well, here's the thing with the reverse mortgage right now. Here's the thing that is not going to last. Anybody listening, if you've been thinking about it, you need to give Ed a call, because here's the deal. You've never had more equity in your house than you do today. Never. You never have. And the interest rates have never been this low simultaneously. How does that help you with a reverse mortgage? Ed, I'm not the lender. I'm not the mortgage guru. So tell them, because I know I talked to someone. It was funny. You and I were talking about this Friday, because I wrote those. So if people don't understand what Ed and I do these days, we've started off as friends. We started off as Rotary brothers and sisters, and then friends, and then became client and consultant, and mortgage. And you've done it. We do all this. But one of the things we were talking about when I was writing a script about reverse mortgages for you, for some video you're doing, some TV, was this commercial. It was a commercial video, television commercial. This reverse mortgage product that you have right now really can change the way a whole lot of our listeners live the rest of their lives out, for sure.
Correct.
But correct. This is really not going to last long, not because of the program, but because of this environment that you have right now, where you have the highest amount of equity you've ever had in your house and the lowest interest rates simultaneously. Why is that an advantage, Ed?
Because you just said why. Do I have to be a dead horse? I'm sorry. Basically, you said why. Rates are the lowest.
And somebody asked me. Somebody asked me, why does that matter?
Because when a reverse mortgage, you don't make a payment. You don't have to make a payment. You can make the interest on the loan. But if you're going to do reverse mortgage, the whole purpose of that is to where you can take the money out and not have to make a payment. And that's the most important thing. So they can change your life. What I mean by that is you're an individual living on $1,100 a month Social Security, but you have so much equity in your home. Only way you normally can get it out is to sell that house and then go rent. And then what happens with rent? If you saw our live this week, we had this showed rents are going up and up and up, and they're going to keep getting worse because as rates go up, it takes more people out of the market and interest, and those rents go up. They don't go down. We've only had a history in time where rents went down. That was probably the Great Depression, the recession, Great Recession, but not any other time. So, and those two things aren't going to happen again. So, and the pandemic, it didn't happen. They just didn't make their payments. That was the difference.
Different scenario.
Anyway, right. So that's why it's important. Now with these programs, that program is a fixed rate. So it's a higher fixed rate than what we could do with the adjustable program under FHA. But the issue is the FHA one adjusts, constantly, because whatever happens with the market and as Fed raises, that's going to go up. But you can't look at it that way. You have to look at your family does not want your house. And if your kids really want your house more than you to survive, you need to get rid of that kid. Anyway, I'm a dad. I can say that. All right. I'm going to say most children of their parents want them to live the rest of their life very comfortable. That's their assets. They created it. But a lot of parents I want to leave something for Johnny. And it's like, no, you need to take care of yourself and not worry about Johnny or Julie,
right,
or whoever their names
or
are.
Whoever. Yeah, exactly. Yeah, exactly. So, rather than lament how different things are right now, or how chaotic they feel, Ed's decided we should get creative. And that's what Ed's really great at. So if you need help with real estate or you have questions, you can reach out to Ed at 209-404-1915. That's 209-404-1915. And if you're trying to figure out how to invest creatively, then you need to stay with us, because when we come back, we're going to be talking to Matt Bryant of TICG Inc. That's the investment consulting group. That's the TICG. And we'll be talking with Matt about creative investing. So don't go away. Welcome back. I'm Marlene Champlin, sidekick to our host, Ed Parcaut, here at Real Estate Jerky on Power Talk 1360 KFIV, where we always give you something to chew on. If you've got questions for Ed, just dial 209-404-1915. That's 209-404-1915. Or visit lendingforliving.com. And now, without further ado, please welcome our guest, Matt Bryant, financial advisor and vice president with TICG Inc. That's the investment consulting group. Hi, Matt.
Good morning, Marlene. How are you?
I'm fabulous, and Happy New Year.
Thank you.
It's really nice that your beard finally got gray.
I don't know if it's the stress of the 3 kids or if it brings a little wisdom, though, I think.
Yeah. People think you're older. And then when you get older, you shave it. Then that way you feel like you're younger. All right, Matt, thanks for coming on the show today. I appreciate you coming on the show today. Let's talk a little bit about investing, kind of what you saw in 2021. Where do you see the markets going in 2022? But before we get into that, what do you want to talk about today?
Well, first off, just, we're in tax return time, right? So everybody, getting that stuff together. I just kind of want to talk about that real quick. Is that okay?
No,
whatever I want to do. I just wanted to let everybody know, hey, before you file your taxes this year, if you're younger and you have children, make sure you get all those documents together. Unemployment, anything like that, you may have to pay taxes on that stuff at the when you file your taxes. So don't try to hurry up and get everything filed and miss those documents, those 1099s. Make sure you have all your stuff before you file. And it is better to file earlier, just because if someone was to take your ID and file with your ID, then you have to prove that you are not that person. So it is better to file earlier so nobody can steal your information, but make sure you have all your ducks in a row before going into that this year. So just wanted to, 2021, it was best year for growth. So it's been an interesting year. We've had higher than expected inflation. I saw something this year that said, if you had invested in 2001, $10,000, and you had it in 2021 still invested, it'd be worth $67,000 this year. If you stuck it in a bank account and left that $10,000, it'd be worth about $6,700 this year. So you definitely don't want to leave your money in the bank account doing nothing. You gotta want to do something with it, right?
So the money on cash I have in the coffee can in the backyard's not good either.
I mean, it's good, but you want to do something with it because it's losing its purchasing power right now, obviously. So get it invested, get it in a diversified portfolio or real estate, through your solo 401k, which we'll be talking about. So those are options, but yeah, do something with it. Don't just sit on it. I'd rather have it in the market and down in value than just sitting in the backyard doing nothing.
Right, because it's already down.
It's already down. Exactly.
Yeah. And because I saw today inflation's at the 40-year high right now.
Exactly. And I'm sure that will taper off and later in 2022, maybe, hopefully. We'll see.
Yeah. Well, depends on the policies and everything put into place by our government.
Yeah. And we're 2 years into this this virus now, right? I was in Disneyland last week. It was full go. There were people touching everybody everywhere. My kid was touching the railings everywhere. People are out doing things. People are spending money. We are adapting right now, right? We have adapted. Companies are adapting, and the economy is recovering. People are going back to work. So that's what I'm seeing. People have had it with this. It's the flu. I know it's dangerous, it's contagious, but we're moving on. The economy is growing. People are spending money. Yeah.
All right. Marlene, anything?
I was just thinking about, anytime you
Disneyland?
bring up the, well, Disneyland, I went this year. Remember, I went in July because that was when they opened it, and they opened it to California residents only. And I turned to my grandchildren and said, if we're ever going, and their parents, and said, if we're ever going, this is the time to go, because it'll be lots less people, which is not because I'm afraid of anybody, because I'm not, but the crowds and the lines. So we went. It was amazing.
It was still busy, and people are spending money because now Disneyland is a la carte everything. So the more you pay, the better experience you get. And so it's kind of like some sick boot camp where I carry my kids around for 30 miles on my back because I clocked it. And I open my wallet upside down and just shake it out while I'm there. But, people are out spending me left and right. I mean, so there is money in the economy. People are wanting to spend.
We're listening to Matt Bryant of TICG Inc. That's the Investment Consulting Group Incorporated. Matt's a financial advisor and vice president. And if you want to reach out to Matt because you hear him say some things you like and you need his help, you can do that at 209-577-5704, or just go to TICGINC.com or .net. They've got both. Thanks. Thank you. Right, Matt? TICGINC.com. And reach out to Matt Bryant for some great financial advice. If you want to reach out to Ed Parcaut for some mortgage help, that's 209-404-1915, 209-404-1915. I got a question for you, Matt, real fast, since
I hope I have an answer.
You do. You always do. You're good with that.
Or if not, you'll find it and get back to us.
Disney stocks. What a person could buy those? Yes.
You can buy individual stocks. I would say for the younger investors, if you're starting out, you just need to get a diversified mutual fund. Buying individual stocks, you increase your risk threefold. I have that individual company, I have that sector, and then I have the overall market. If I own a mutual fund, I'm diversified over a plethora of stocks. And so the volatility is not going to be as great as if I buy one stock. As I get older, now I've got $300,000-$400,000 saved. I'm working with an advisor. Now that may be in the portfolio that we have. and you have a stock portfolio. It just depends. But starting out, I would look at a mutual fund if you're trying to grow your assets versus putting all your eggs in one basket.
And before we get into other stuff, but now if you're doing this, you want to do this in some type of retirement account, because I think a lot of younger people have the Robinhood or, one of those accounts, and they're constantly trading throughout the month or, as soon as it goes up, and they don't realize the cost that's costing them by doing that, right?
There are transaction costs. And then not only that, if they're doing it in a taxable account, they're going to be, they're going to have to pay taxes at the end of the year that they're not aware about. So, it's the same people going in and out of these cryptos, and they're realizing, oh, I got to pay taxes on the, yeah, you don't get to do it for free. Yeah. So do it in your IRA, don't pay or your 401k, your solo 401k, and don't have to pay any kind of gains or losses right now. Yeah.
Because I think it's 30% if you sell it before a year, and then if you sell it after a year.
Yeah, exactly. It's like ordinary income, and then long term is a little bit less. Yeah. It's like 15.
And and they, they're liberals until they figure this out.
My brother-in-law, I love him to death. It's fun to watch a 16-year-old become a 26-year-old construction worker and start saving his money and going, being on one end, and then they completely shift by the time they're 26, 27. So that's why conservatives are generally older, right? That's they have money.
They just get tired of working hard for their money and having to take in and paying for stuff that they don't want in the first place.
Or you're uber wealthy and you can afford to be.
Right. Then it doesn't matter. You got to be charitable at that point. All right.
I never said anything about 2022. Is that okay?
Yeah, that was what I was going to ask you. But go ahead, since you already brought it up.
Well,
you understand this is Marlene and my show, right? Not your show. This is our show.
I'm taking over. I better be careful. I'm going to end up subbing in for you one of these days, having to take over your show.
Oh, there you go, right there.
All right. So tell us about 2022, because we're going to be going to break in about 2 minutes. So whatever you don't get fully into, we'll bring up on the other side. Okay.
2022, I'm excited. We're excited as an office. I think there's still a lot of potential in the market. I think it's going to be a little bit bumpy. We're going to see the government taper off any kind of stimulus or inputting of money into the economy. I think we're going to see it handed off to the private citizens and the corporations. And so we'll see how that goes. I think that's going to be good, that tapering. We're going to have the midterms. Like we said in our letter, Marlene, don't get too caught up in, who's, if who's elected, is that going to affect my portfolio? We're looking long-term on policies. We had a lot of clients when Biden came in that were concerned, but, actually the economy continued to do well because of the stimulus and everything going in. So, people jumped out and missed the boat on a lot of gain on the back half of the year. So, look past just who's getting elected, talk to your advisor, strategize. In our office, our portfolios are created to run right through a down market and the volatility. We don't get in, we don't get out. We have a portfolio built to run right through that. And so that's just having a good diversified portfolio. And you strategize with your advisor before the end of before we get off into this year. And
I think a lot of people don't realize that the uncertainty and these things that happen is a good opportunity to make money for a lot of people. And a lot of people I want steady. No, you want this stuff so you can take advantage of drops and increases and all the other stuff. Correct? Am I right?
Correct. Exactly. And we're dollar cost averaging for us young guys, right? We're putting in every month out of our paycheck, out of our 401k, and that's called dollar cost averaging. So every month I put in the same amount. Some months I buy a little higher, some months I buy a little lower, but the overall trend over my lifespan of the investment is going to be, my average cost is going to be lower.
Gotcha.
Politics, investing in 2022. Are there other things you could be doing? Well, when we come back, we'll be asking Matt Bryant, financial advisor and vice president of TICG Inc., about some little known programs like a 401k solo. So if you've got questions about the real estate market, please reach out to our host, Ed Parcaut, MBA veteran and president of Lending for Living, at 209-404-1915. Again, if you want to reach out to Matt, that's 209-577-5704 or TICGINC.com. That's TICG, the investment consulting group. Just think TICGINC.com. So you need to be creative investing in 2022. What does that look like? And you don't want to miss our next segment. So don't touch that dial. I've always wanted to say that. Don't go away. This is Real Estate Jerky on Power Talk 1360 KFIV. I'm Marlene Champlin, sidekick to our amazing host, Ed Parcaut, MBA veteran, mortgage guru, and president of Lending for Living. Picking up where we left off with our favorite investment advisor, Matt Bryant, vice president of TICG INC. That's TICG Incorporated. Matt, we were talking about politics and investing and how people missed part of the back end of 2021 by getting out of the market because they were nervous with Biden coming in. What's a good portfolio? What's a good creative way? And how do you do that? How do you invest creatively and miss some of this craziness that politics can influence?
Keeping it simple. Like I said, having a well-diversified portfolio, making sure you're hitting all the right sectors. We use special software in our location to match other offices and see what they're doing and chart everything. Some of these platforms allow you to do that. Most people don't have time to do that, so they rely on us to do that. A lot of people are getting into tech, crypto. I've dabbled in that a little bit. It's up, it's down, it's all over the place. If you're going to do that kind of stuff, you better be ready to take a wild ride. You will be up, you will be down day to day. Right now, the tech market's down, but there's hope that it bounces back. It will. It's like I saw Bitcoin. I saw a thing the other day where it said it started the year at this price and it's $800 more at the end of the year. A little volatility, whatever, but in between it's been, nuts. So, find a portfolio that allows you to sleep well at night and that you're not, and that maybe you don't have too much volatility, or if you can stomach that, go for it. But yeah.
I think
Gold.
Marlene asked you about gold.
Gold. What's going on with gold?
Yeah.
Yep.
Gold, you narrow yourself down into a tiny little sector, and the return is just not there right now. So we are not heavily invested in gold.
And for me, I always say gold's a bad investment because it's always the price of a really good suit.
I just did a charting of gold versus our portfolio, and we have risk score from 0 to 100. We were 30 points less, and we were about 6% return higher. So, because I had a gentleman scared to death, I said, look, your portfolio is outperforming. And because you are not narrowed into one field, your risk is actually less. So we stayed where we were, just continue the course.
Right. And
so I think that's
issue.
Go ahead. No, I just think that's why you have somebody like us to, talk you off this cliff, because he was about to go put himself into a portfolio that's not going to allow him to make much gain in 2022. And he's 2 years out from retirement. He said, no, we still got to go the course that we're at. You got 2 years. We need to make more money for it. So.
Right. And one thing I wanted to say about gold, and I bring it up all the time, is you can't just buy gold. If you do buy gold and actual gold, then you have to get it checked before you go to sell it. And there's a lot of stuff involved with it. So it's not always the best thing. You want, just like you said, you want to diversify. You can dabble in crypto in one point, you can other stuff, but you can't put all your money in one thing, because that's where you get burned.
Yeah, absolutely.
Yeah. Speaking of tech, going back to the tech market again, I mean, I'm not, this is why I have Matt, why we have friends like Matt. Matt, you say tech coming back. I mean, is this China policies? I mean, more politics influencing politics and virus.
It depends on what you're looking at. The chip shortage, that was a big issue. That had to do with China policy. But other things like Bumble, Coinbase, Peloton, what I recommended to the young investors is, hey, when it first comes out, because I've learned this the hard way. don't just jump in right away, okay? Because it starts at a certain price and then it dumps $100. And I've done it multiple times. It always does. And you think you're going to miss out on the next Tesla. Give it 6 months, give it a year, let the company, let the new stock, the IPO, just kind of do its thing. But I don't jump in right away. That's where you're on a volatile road, and the stock hasn't settled yet.
Yeah. I mean, Tesla didn't go through the roof in the beginning.
No, it did not. You're right. Absolutely. And it went through the roof and then pulled way back. And that,
Yep.
If you really want good advice, the number one trader last year was Nancy Pelosi.
Stop it.
Hold on. Let me finish.
I'm going to do the
$50
idea.
million in assets they traded last year. She's the queen trader.
We're
That's
talking.
amazing that she has time to do both. I like your cup there. Classy.
We're talking to Matt Bryant, financial advisor and vice president of TICG Inc., the investment consulting group. And you can reach out to Matt at 209-577-5704. That's 209-577-5704, or visit TICGINC.com. That's TICGINC.com. If you've got questions for Ed and about mortgages and real estate or kind of life things in general, Ed's a pretty good guy with that. 209-404-1915, or visit lendingforliving.com. And if you'd like to get to all of us, any of us, can't remember the rest of it, radio at realestatejerky.com. You guys are so, but it is pretty frightening that Nancy Pelosi, a government employee, a servant of a a public servant, right? What's the annual salary? Does anybody know? For
like 170,000, I think.
She doesn't need the salary. She's a gazillionaire. It doesn't matter.
Well, that's what happens when you get founder shares.
But why is she a gazillionaire?
Because it's all rigged.
Let's move on.
No, but
hold on. Let's not go there because we only have a little bit longer with Matt. We can bring that up when we come back.
And we need to talk about for creative.
That's the
investing.
we do. Right. We got to do that.
The reason I wanted him to come on is I came across this thing called a solo 401k, and I wanted people in our area to understand what that is so they can use it, because it's if you're a real estate agent and it'd be perfect for you. If you're a business owner, all this kind of stuff, and you don't have a ton of employees, this would be really good for you, or no? But Matt, can you explain what a solo 401k is and why is it so powerful?
Yeah, let me get into that. So solo 401k, this is really big with real estate agents because they don't have employees generally. A solo 401k allows you to put up to $67,500 into a individual 401k for yourself during the year. So I can break down what that looks like. So a normal 401k, I can do in 2022, I can do $20,500 to my employee contribution, right? If I'm over 50, I can do a catch up of $6,500. So that gets me to $27,000. And then I can do 25% of the gross profit up to $40,000. So I can get up to $67,000 in the 401k annually. Okay.
The solo 401k. You're talking
the solo
about,
401k. The solo
right.
401k.
So let's make this clear for people. So in a regular 401k, the max you can put in there is
$20,500 plus my catch up, so I can get to $27,000.
Okay, so max 20. It'll just say 27,000. The other one allows you to go to 67,000.
Now,
that alone is really good. But the other benefit of it is you can invest in a lot of things, right?
Absolutely. The solo 401k is not held like a corporate 401k for any of the companies where you're an employee. You have a list of mutual funds you can buy from, target dates, a couple other risk-based portfolios. This allows you to take your money and go buy, I can buy real estate inside my solo 401k. I can do promissory notes, things like that. Can be a pain in the rear, but you can do that. Art, things of that.
Bitcoin. You can buy
crypto if you really want to do that. If you want to turn it in half, go ahead and buy some crypto in there or Coinbase and have a wild ride. Yeah.
Right. But what's nice about this is, okay, say you want to buy investment property, right? With this. So you take the money out, the solo 401k, that is your down payment for the transaction. Get a loan for the rest of it. And then the profit from that sell going forward goes right back into your solo 401k with no tax taken out. Then you do it again. Exactly. And you do it again, and you do it again, and you keep doing this. And then the next thing you know, you have millions and millions of dollars in a solo 401k, which you could not have done any other way. Because a lot of people don't understand, well, how do I buy when I only have, $50,000 in there? Well, that's your down payment on it. Right?
Yeah, exactly. And you can also take a loan out if you'd like to from your 401k, and you can pay yourself back with after-tax dollars, but you can do that as well if you need to take a loan. So that's possible as well. If somebody
wanted to start one of these, they just contact you, give you a call.
They can contact me and I'll get them all dialed in. Yep. Yeah. Any real estate agent in Modesto that wants to talk to me, set this up.
What if I'm in Riverbank or Oakdale?
If you're anywhere, I'll take you, whatever.
There you go. If you're in California, give Matt a call.
That's right.
Yep, absolutely.
Just trying to help you, Matt, not trying to limit your.
I appreciate that. Did you guys, I know you have talked about this in the past. Have you talked about what is not allowed inside, what are prohibited transactions, things like that? Have you not gone over that?
No, we're not licensed to do that. That's what we have you on for.
Oh, yeah, I appreciate that. So if I own a rental, if I own a property through there and I'm renting it out, it can't be a linear descent. Go ahead.
Let's keep can we keep him, Ed, a little bit over?
Mm-hmm.
Okay, let Matt, because we need to go to a break. So let's keep you into that. So hold that thought of what you can't do with the solo 401k.
Yep.
Let's the best part of listening to Real Estate Jerky, right? And hanging out with people like Matt and our host Ed Parcaut and our iHeart engineer Mike, besides helping cool people like you get into homes, it's meeting all these great people and connecting them to you so you can live your very best life. I'm Marlene Champlin, trustee sidekick to our amazing host, Ed Parcaut, MBA veteran and president of Lending for Living. And I know you've got questions, but we're going to clear up some things about a solo 401k when we get back. So don't go away. Welcome back to Real Estate Jerky here on Power Talk 1360 KFIV, where we always give you something to chew on. I'm Marlene Champlin, sidekick to our amazing host, Ed Parcaut, MBA veteran and president of Lending for Living. And we're coming right back real quick because we were talking with Matt Bryant and we're going to continue. We're talking TICG, INC, TICG Incorporated. That's Matt's vice president of the company's financial advisor. We're talking about a solo 401k, what you can do. And now if you were staying with us, here's what you can't do. So Matt, keep going there, please.
So there are certain people who are disqualified to benefit from what real estate or whatever you're doing with the solo 401k. That would be the person that is the owner of the 401k, your spouse, grandparents, brother-in-law, anybody like that. They cannot benefit from what's inside this 401k. So I can't own a rental, and I can own a rental, but I can't put somebody in that list in that home.
So you can't have a family member rent from you, basically.
Or they can't take a loan out, a promissory note, anything of that. Anybody that's arm's length business partner, any of that stuff. And then on the prohibited transaction side, I can't use the money in the plan to give a loan to the real estate company. Like we said, I can't furnish a home with the money in the plan or things of that nature. Okay.
Gotcha. Anything else?
Yeah. I think that's it right now. But
basically, you can't use it to benefit somebody else in your family. It's basically just to benefit you as the owner of the thing. Basically, you could buy a rental property, put anybody in it but your family.
Now, are there doctors out there that own VRBOs on the coast that are funded through solo 401ks, and are they using it in between the VRBOs? Probably, but that is not it is illegal. You're not supposed to do that, but there are people that are doing those kinds of things. Not saying that's a good thing, but we do see that kind of stuff. I mean, yeah.
You know what? Our engineer asked a really good question, Matt. Can it go in a trust? So if the property that,
Well, 401k is a trust.
No, but
So-
so basically what she's asking
No.
is like, you have the property in like a trust or a family trust or LLC kind of thing.
No, it'd have to go through. No. Yeah.
So, but you could have it. So
Now the
You're
trust
buying it
could
for
sell
yourself.
it. The trust could probably sell it, and you could probably buy it. But that is something for a CPA or a third party administrator like Zach Osborne, who you've had on the show talk about Cal Savers. That's somebody we would get involved to work on the inside of it.
right, and they'd have to probably get an attorney involved because sometimes they know stuff that you wouldn't. This has to do with setting certain things up.
And
But you have to look into this because this is an advantage for people to do something that they haven't had to do before. Because unless you have a profit sharing plan, right? That's the only other one that is for corporations, right? That you can kind of do the same thing.
Yeah. Well, I've seen companies in Modesto, large corporations that have a section of their money buying real estate portfolios. You've probably seen that as well. So it's being done in bigger plans as well. Yeah.
I run through gas stations all the time.
But I would say, so if you own the solo 401k and you want to keep it that way, you're not selling the property after you're done using the 401k, you're going to roll that over to a self-directed IRA, right? So you'll use a company like Pensco or something to move that money over, and then they will manage it for you. Or if you have a good third-party administrator locally, they could probably do it cheaper. But there's a lot of layers underneath. There's a lot of work going on the admin side.
But what's nice about this is you don't have to do a 1031 exchange when you go to sell that property, because that money is going to go right back in your 401k. And there's no issue where if you're doing this differently and you're selling an investment property, 1031 exchange it into something else. And you can 1031 exchange that into, there's some REITs and different Delaware statutory trusts that you can put your money into, that while and it'll grow just like real estate until you find whatever you want to do.
And then it'll all come out as ordinary income, right, when you get taxed. But I'm not a tax man at all, but I think there is you don't get the depreciation or anything like that on the home inside the 401k. But yeah.
Well, you know what? That's what we need to talk to you to get a CPA, and they can answer those questions. Matt, really appreciate you being on the show today.
Thanks for having me.
It was Marlene's pleasure.
I hope it's clear as mud now.
No,
well, if not, they can reach out to you. So
I think you made it great. Thanks so much. So you're listening to Real Estate Jerky here on Power Talk 1360 KFIV with our host, Ed Parcaut, MBA veteran, mortgage expert, and president of Lending for Living. If you got questions for Ed, reach out at 209-404-1915. And we've been talking to Matt Bryant, Vice President, Financial Advisor at TICG Inc. That's the Investment Consulting Group, TICG Incorporated. Reach out to Matt at 209-577-5704, or just go visit TICGINC.com. And we are just going to move right on into our next segment and react. So hang in there. So, the cool thing about Matt and you, Ed, is you guys go back and forth and the creativity of it, of what you can do when you start to accumulate. But the bottom line is still the reason we started doing the show way back when was home ownership. Mm-hmm. It's still the best way to build personal wealth. It's how you start, right? That is correct. I mean, you have to get your first house to get many houses, right? You got to get your first one. So, right. I mean, you can't start in this business without having your first, getting your first house. And that's what we're here. We're here to help people understand you need to buy a house, because we looked at this rent schedule yesterday when I had Bobby on it live. We were doing it and it was showing rents, right? And if I bought a house in 2014, my payment doesn't change any longer if I have a house, right? Yes, your insurance might move up a little bit and your taxes a little bit because of Prop 13 only allows it to go up a little bit. But if you didn't,
Now you're up here in 2022, and that payment is so much higher, right? Rent wise. I mean, the average rents in Modestos are like 22, 24, 26, 20, they're all over the place. And you're like, what? And so if you were in where you could rent a place before for $1,450, and then now you're at 24, but you had a mortgage payment in the, say, 1600s, now you're saving money, right? Back then. So it's important to get in and it's the same thing that you ask me all the time. When should people buy? The moment you start thinking about buying, you should be giving us a call, direct message me, whatever. Find me everywhere, Ed Parcaut, and we can help you. And, if you don't like me, we'll get you somebody else. How about that? But you need to get started.
For the most part, Ed, everybody I've sent you adores the advice, and you always help get them the right thing.
That adores the advice. Not I'm just kidding.
No, they do. You do a great job. And that's my recommendation. As you know, I was talking to my granddaughter. We went to Hawaii, and we were talking. She was asking, she's a college student, but she's making money, and she's headed into a career where she's going to make decent money, very decent money, nursing. And she's already working at a hospital as she's finishing up her degree. And she was asking, should I buy a house? And I said, don't look at it that way, sweetheart. I said, look at it, buy a condo, buy a duplex, buy something that it's an investment. You're only going to, just like you're investing in your career right now. You're paying money to go to school. She's all the wrong things, other than she's very smart and has great grades, but she's paying for it. She's got a little bit of grant money, but for the most part, she's going to be on the hook for all that. And I said, you're investing. This is the same thing with what you do with property. You got to live somewhere. You might as well, while you're doing that, and then somebody else can live there. And she's like, well, I don't want to be a landlord. I said, you don't have to be a landlord. When you buy you buy a duplex or you buy a townhouse, you give it to someone else who does that property management. You pay them a little bit of money. And so, yeah. Oh my gosh.
And one thing about, especially nurses and those, they start off at some of these hospitals the moment they become a nurse at $150,000 a year.
Yes.
So there's no reason.
She's already making pretty decent part-time money. I was stunned how much.
Yeah. And unfortunately, I'm being yelled at by our engineer.
You got another client.
Go. We gotta go. Gotta go.
Okay.
All right. End of today's show. That's Marlene's little sparkle going on there. Thanks to our guest, Matt Bryant, financial advisor and the vice president of TICG, whatever it is, the investment consulting group. You can reach out to Matt at 209-577-5704. Again, that's 209-577-5704, or visit TICGINC.com. If you missed any of today's show, you can find us via podcast, and that's on the iHeart app via your mobile device. We'll also be visiting more of our candidates for Congress and Assembly. We have Jack Griffin will be joining us. He's one of our Republican candidates for Congress in District 5. We'll also be talking to candidates for Stanislaus County Sheriff, Sergeant Juan Alanis, and Sheriff Jeff Dirksey. Please keep a cool head and be safe out there. Remember, we're proud to live in this land of opportunity where you can still build personal wealth through homeownership. We will keep bringing you something to chew on here on Real Estate Jerky each and every week. Hey, I don't know, our Saturdays, let's say we normally broadcast Saturdays at noon. I'm sorry, I got a little distracted. I just don't know if there's football, and Sundays 10 a.m., but NFL football changed that. And I think this weekend we might be messed up because we got playoffs, right? But you can always find us via podcast at your favorite podcast app. Like I said before, just search Real Estate Jerky and you'll find us. See you next week, Marlene.
Yeah, sure, Ed. Where else would I be?
I don't know, working. All right, my NMLS license number is 235-384, and we'll talk to you next week.